let's get it. So what I mean when I say macro is I'm not looking for, like, for example, this to this to this or anything like this on log. For log, it's all a bigger picture, right? So for example, how did I get these on rune? On rune, you have your macro low to your high, and we know you've got a double tap at the 618. You have a smiley face at the 618 now officially, right, on log. Very, very, very crucial here. That is showing you a long-term accumulation structure, right? Even though this is a huge sell-off, the fact someone defended this here is telling you someone's still accumulating this at these levels. So you've got a smiley face. And again, it's not just the fact the accumulation came in, it's where did it come in, right? So we know we have a macro golden pocket, macro primary retracement, 618 at this particular area. And on top of that, if you take now the macro trend basic extension of the downtrend, which is this high, this low, and this lower high, right there, sorry, we can see that golden pocket also lined up between the 61866. There was the 764786. So primary retracement plus deep value on the trend basic extension, extremely confluential in this case. Right, if it had one more stab deeper, honestly would not have cared, as long as this was paired up with weekly bullish divergence, right? That would have been the cherry on top. Again, because why? Resistance, resistance, and then demand, demand, right? We have a what used to be resistance and now what used to be supply and now demand. We have a demand zone, right? A demand triangle, let's say, down here on rune. So even if you had one more raid to the downside, taken out all of these wicks as well, you would have hit the liquidity rate of the golden pocket right over here, plus the 87886. So still deep value, right? Still confluential, and then reclaim and go. Doesn't matter. The fact, buyers defended here, that's great as well, right? Doesn't matter that we don't get this. We can get this in the future. I don't care. This is the fact. Right now, what we have in front of us is a cumulative structure, right? Of course, now the more candles and any more taps to this to build more local structure now would further emphasize this. For now, what we have is one tap into this area, but a tap nonetheless, right? And an extremely strong reaction off that tap. So for log, only the macros. I don't look for, like, let's say, this to this to this or anything like this. You'd have too many levels on your screen.
Yeah, sounds good. Thank you.
No problem at all, brother. But let's take a look at Bitcoin, right? So literally, hang on, let's go to the 3 for this. There we go. The scalp I missed is this entry right over here, so you can see why I'm mad. Loads of aggressive sellers going in, right? Yet those aggressive sellers were not rewarded. Look at this on the 1 minute as well. Go down. Loads of aggressive sellers going into this area. If you look at the footprint charts at this particular point in time, there was absorption going on as well. In fact, I can show you that absorption just through TradingView, I think. Yeah, here, if you take a look back. That there was, this is on the 1 minute, so this was here. That was this move right over here. If you take a look, now what do you see? Loads of market sells. Every single candle you see is full of market sells, but over time, what do you see? Positive delta, positive delta, positive delta, right? And the negative delta gets smaller and smaller. Positive delta keeps increasing, it keeps increasing. I.e., all the aggressive sellers here are not being rewarded, meaning they're getting absorbed, right? So the aggressive sellers got absorbed. So this was literally a textbook, like, amazing scalp, right? You enter your initial position here. Originally, you go risk to reward because trend's not shifted, nothing's happened. And then when you come down, you perform a higher low, right? After the fact, you have all of these aggressive sellers being trapped. You just, size up here. Your initial entry doesn't get stopped out. You size up, and then you just absolutely take this off to the moon, right? So this was an amazing area to actually enter. The peak thing about this was they gave you hardly any time to actually enter, right? If you take a look, all of these, for saying these are all 1 minute candles, you spend no time in here, right? The structure came, if you got it, you got it. If not, you were left behind, right? You're gonna have to then, look for price action around higher levels to get in. But once you miss something like this, it's just a psychological hit because you're like, oh, what if you get to tap this, on and so forth, and all of a sudden, it's gonna be that much harder to open, let's say, 10 BTC at like 200x, 400x, whatever, right? So it just becomes that much harder. But still, it's like, it's what it is. You're not going to catch every trade. I was doing another live stream earlier today when that actually played out, that zone right there. But after that, well, you can see all aggressive buying going up. Now we have all these aggressive buyers. We have all of this. We seem to be stalling a tiny bit. Of course, this is on the 1 minute, so nothing too serious yet. I think Trump is, as we speak, talking to Mr. Trudeau. I think it's them two that are talking right now, right? I think it's to do with the tariffs. This entire move up was because there was a pause on the the tariffs, right? That's why straight back up. But let's see what happens out of this talk. Who knows? Maybe we get one more flush before we go higher. Maybe we put a high low and just send it, right? I don't care. We're positioned. Four moves up, and it's literally after the insane rally we've had. Everything, even if you put everything as stop loss to break even and they get stopped, you can just re-enter again at those lows, right? So all you have to do was bid at that area, and that's it. But yeah, you can see loads of aggressive buys coming in now. So any, like, let's say distributive structure you see, or lower highs for example, anything like that in this area, might be worth scalping short to the downside. But for now, let's just see how it plays out. Nothing to take advantage of here yet, in my opinion, right? For Bitcoin in terms of scalping. In terms of higher time frame, however, right? So if you weren't in last night's stream, this is what I was telling people in last night's stream, and it was proven again true this morning. Bitcoin at an extremely fundamental level, you can explain what Bitcoin's been doing literally just using two things, right? That being your buy seller zones in this case, right? Your 2024 12-month seller zone here, right? And your fib speed resistance fans. Okay, so let's do this bit by bit. So this is what I went over yesterday, but just once more to really emphasize this, right? All Bitcoin's been doing, all it's been doing since 2024 has ended, is it has been chopping and trading in between the 2024 seller zone, right? That's all it's been doing. The area where sellers were active, sellers haven't managed to re-establish serious dominance in that area yet, right? So we can see, look at the price action. As soon as we opened 2025, you went to the mid, rejected initially, swept the highs, used the mid as support, kept using the mid, lost it, and then you took the lows once again. But as soon as you took the lows, what happened? Right, straight reaction back to the upside. Buys keep defending that 2024 12-month seller zone low. You're ranging. No technical damage has been done to the chart. There's been no structure change, anything like this. Just been ranging. Yet you already have loads of people calling market tops just because of this, right? That's because people calling market tops here are 99% in olds, right? They got demolished, so they think the cycle's over. When in reality, we know Bitcoin is literally just ranging. Nothing has happened on Bitcoin, right? Absolutely nothing. You can't look at it in a simpler fashion than this, right? You're ranging there, and the other way you can look at this, like I was just showing you, is this, right? If you take the fib speed resistance fan from this high to this low, right? That's that move right over there, from that high to that low. You take that fib speed resistance fan. Obviously, what did you do? You went past the one, right? The one being this right over here. That's your one, right? For this, so just in case you guys are confused a bit, let me just create a copy. There we go, and let me just put the normal golden pocket plus liquidity rates on. There you go. Right, so that's your actual fib speed resistance fan. You've got your range. There you go. Right, so that's between 0 and 1, and even if you get, for example, right, you get the deep extensions on. There you go. What you notice is, we were here for ages, right? So rejection here at the 764786, high low at the golden pockets, and then rejection at the 87886, high low at the 764786. What was once resistance flipped to support, what was once resistance flipped to support, and then you went higher. Right? And the same thing here. What happened? You went now to the extension golden pockets. That's all you've done. Right? You've gone to the extension golden pockets. So if I was to get rid of these, this is literally the mirror of this. So what you're doing here is basically what you're doing here. Right there, you chop. Here you chop. You're chopping in an even nicer manner here, because you're actually in between your golden pockets, right? So you can see every high, every low, every high, every low is accounted for by the golden pockets plus liquidity rates. Even the dump we had yesterday, and this is exactly how we were looking at it in the last night's stream before this serious capitulation happened, saying, look, if it goes back towards this area, don't even fret, because the literal price action we've been getting so far is anytime you get to this area, buys defended, and you go higher. And that's exactly what we've got again this morning, right? Not even 24 hours later, you got the dump, buys defended. We had an M shape, right? That's another thing we looked at. We had an actual harmonic here, right? You can say there's a bat, you can say there's a shark. Doesn't matter what you say there is, right? So for example, from this X to here, to here, to here, to here, right? You can say there's a bat, you can say there's a shark. Honestly, it doesn't matter how you look at this. You have two M shapes, right? Right in confluence again with your area that we've already said is extremely key, extremely significant, right? Let me delete that. And that's where you went to, and that's where again buyer stepped in. Right, that's it. That's where buyer stepped in. Of course, we also know you can now get the you could put the fixed range volume profile down for this specific range, right? So from this to this to this, so basically all the way up for this range, you could put the fixed range volume profile down. So if we went to, what would that look like if we went to Binance? Right here is Binance. So where would we say this range started? I'm just going to take it from this black candle over here. Right? If you took the fixed range volume profile for this new range, right, all you did, you hit the value area low, right? You hit the value area low. That's it. You didn't even hit the second value area, the standard deviation 2 value area. I'm pretty sure. If you just do, hang on, what just happened? There we go. And then let me do this and standard deviation 2. There. Yeah, we didn't even hit the second standard deviation value area low for this range, right? Like, it would have been completely fine. Even if it hit 87k or 85k, would have been fine. Just to sweep of the range and then back up. But you're literally still within your most traded volume. Very, very tight. All this to say, it's when you see all these doom posters, like I've been saying constantly every single time I stream, there has been nothing on Bitcoin indicating a market top. There has been nothing indicating, oh, bearish structure. There is distribution going on. Tops it. Nothing. Right? Nothing significant at all. This is the same rhetoric I was saying last night before we got that dump, and even after that capitulation, look how it turned out. Literally, like, less than 24 hours later, right? That is an extremely beautiful candle that is currently printing. So, what's next for Bitcoin then? Well, we know, you're getting towards value area high. You're getting towards point of control. You have resistance. We know where our higher time frame and lower time frame supports and resistances are. What's going on here? This is the BTC Binance index. Oh wait, no, that's why. Sorry, got confused. Yeah, let's go over there. We have just broken above. Jesus Christ. Here we go. All right, we've just broken above the this. Okay, this is going to be significant here. So this is what I'd watch for. 2024 12-month seller zone mid. Okay, the mid, we've broken above that. Do we maintain above that is the question. And what I'm going to do is I'm going to create a copy of this for you guys. And in this, we're going to go with the range of 1 to 2. Okay. I should have that. But if not, we'll just go with... there. So all I've done is put the mid on as well, right? You're at the 1.5 right now. If we now go ahead and start turning this area into resistance, you can scalp short, okay? You can scalp to swing short. Because what you've done now is, of course, if you go back up here and then you start rejecting, that is now a sign of a breakdown and then a retest of the breakdown confirmation, right? So any weakness in this area, definitely look to protect your downside, right? On some scalps back towards 93k and lower perhaps. Maybe you do hit standard deviation 2 before we go in higher, right? So that's that intense move up. Here you look for weakness, right? If you see weakness, if you see sellers showing you an edge at this particular area, we all know how to get this level. 100,876.95 is on the index chart. You might have a exchange specific level, doesn't matter, right? This mid, that's the important thing. If you see that mid being turned to resistance, right, you scalp short, right? You head short rather, even compared to scalp, you head short. Perhaps you get one more flush back towards the downside before you go higher, some sort of high low hit, maybe even a flush of the lows before going up, right? Could happen, never say never. So if you get that breakdown and you start seeing the retest of this area, the retest being unsuccessful, right? Take that head short, okay? Just protect your downside. But if you flip it into support, right, you come down here and then you keep flipping it to support, then you're looking for continuation back towards 108k. It's as simple as that. You literally have a intersection coming up as we speak, to be honest, right? If you wanted to, 4th of February, 5th of February, or somewhere around the 6th, let's say up to the 6th of February, we have intersections coming up, lining up at this area 8th, right? Somewhere around within the next week, within some time this week, let's say, basically, if this flips into support, we do have a potential intersection up here. So do not fade this. what happens here is going to be pivotal, right? If you break down and do this, that's your short trigger. Take the short back down. If you don't, and you keep flipping this to support, then you can try and scalp this to the upside, right? Look for the intraday trades up to the upside. Look for scalp entries to the upside, lower time frame entry models with your higher time frame bias. But you can see, like I was talking about last night, right? There's nothing to fear. The only reason you actually switch bearish, right, properly bearish on BTC, and therefore on the market as a complete whole, as in like the top is in, we're done, is when you do something like this, and then next thing you know, this is turned into resistance. You have distributed structure coming on. Then yes, you swing short, right? But that hasn't happened yet, right? And being premature with your shorts, well, we can see what that leads to. So let me check back to the chat in case there's any questions. Your sub, guys, sub, welcome. If you have any questions, put it in the chat. AVAX, yeah, beautiful tap of that the Fib fan, bro, on AVAX. What's the second one you put in? I can't see the ticker on my screen. Inch, oh yeah, nice. Yeah, I got into Inch too. But yeah, so that's BTC. Ethereum, right? This is the one I'm interested in. Take a look at what we did on this beautiful exact same levels that this has been on my chart for years now. And I know I keep harping on about significant levels, but this is what I mean when I say significant levels. This has been on my screen for years because you guys know how we get this, right? The data to get this was already on your screen before the previous bear market even finished, right? We literally took it based off all the data that was here before the bear market even came in. After the bear market came in, we simply tweaked it a little bit based on the new data that we had. Right, but this zone is very achievable, literally before, based off the move up we had in 2021, and this, let's say, January drop that we had, so on and so forth. Very, very achievable, right? Yesterday, when we were looking at this the stream I did last night, we were looking at this. We were toying around this zone here, right? We lost the mid, and again, what do I always say? If you lose the historical price range 3 mid, do not be surprised if key inflection area gets tapped, right? So key inflection area got tapped after a loss of the historical price range 3 mid. And don't worry about the lower range as long as the key inflection area holds. So i.e., this is your bid. This is the area where you get your highest RR entries. Right, so that's the first thing we go through when we do key inflection areas, like the most foundational stuff all you guys have done. This is where you take your highest RR trades, right? You came down you can just look at the reaction of it, right? Crazy reaction. Now, of course, if you wanted to enter ETH right now, I would actually say don't do it. Why? Because that reaction is done, right? You no longer have the buffer of having a very, very good RR. You're up against resistance. You could do this, come down, and then also the chop before going higher. If you're not entered ETH at this point, it's just better to just wait for that. Right, even though you have to wait for a bit longer, the fact that you're above this is going to give you a much better entry in terms of a thesis. Right, below this is resistance. Just wait for it to be flipped into support, and then you can look for higher prices again. Right, but this I did. It's ETH bids did fill last night. Okay, so these levels have been the same levels on our screen for you guys basically since we've started one-on-ones. No matter how early we started it, because these levels on my screen before I actually started teaching one-on-ones anyway. Right, so it's the exact same levels. We went there, we tapped it, and then insane reaction straight back up to the upside. Do take a look at what kind of structure did we develop here. Right, you lost the high, you hit the mid, and then your low is your last area. So let's say you wanted to spot bid this, how would you normally do it? You guys know it's like, let's say if you wanted to do it 15, 30, 55 or something like this, right? That's how you normally do an entry on best of a zone like that. If you do go with DCAs and you're limiting, what you do not do is, in my opinion, you don't go all in on your entry plus limits, right? Because if you try to catch this with entry plus limits, that's cool. You have faith in your system. I have faith in my system, but no matter how much faith I have in my system, I'm not gonna sit there and full pause a entry just on one dump. For me, it's just not worth it, right? Because if this key inflection area hadn't held, right, for whatever reason, then if 2030 was lost, we would not be surprised if we did not get any respite until we hit 1,500s. And any entry you get here is going to be liquidated by the time you get over here, especially if you're on leverage. And even on spot, that's going to be a nasty drop to try and stomach, right? If you take a look from here, 27 to 30% basically extra right on top of your full position size being filled. So even if in the future you guys, I've already said this to you guys in the past, so you guys already know this, but just in case in the future, if you guys decide, you know, you're trying to set some limits up on any chart that you're looking at based on, let's say, key inflection areas or whatever it is, do not go all in on your limits. Okay, maybe, you know, 60%, let's say you have $1,000, maybe limit with 500 or 600, whatever you're happy with, 400, doesn't matter. Leave a allocation for when the confirmations actually happen, like you confirm that zone is in, then you can just size up a bit higher. Doesn't matter, you've not got a bottom ticket, average is going to be goated, you're going to get a really good move up on the bulk of the move, you're going to get really good value out of that, right? You're going to, because in that aspect, if this were to go all the way down here and for whatever reason you hadn't set a stop loss, at least you're not losing your entire portfolio or your entire allocation, right? You're losing compared to however much you put in of your total allocation anyway, right? So it's all, everything is in the name of risk management. But that was the absolutely beautiful tap at that key inflection area, right? This is the exact same level I was telling people, you know, as long as you're above this, we're going to be fine. In September, in the harmonic setup video from September, if you guys remember, right? The exact same area I was telling people to get ETH. Just went and tapped that again. But beautiful reaction, and it's not just ETH. Okay, literally every single altcoin did this, hit this extremely deep levels, hit some key levels, and then just had an insane reaction off it. Doesn't matter what you were in. So like I pinged in chat, I bought AVAX, Sol, and ETH. Those are the three main bids that I took. Hang on, let me look at that. Yeah, bro, same. If I go like an elongated period of time without trying, I start to get like twitches, bro. Honestly, get a bit twitchy. But yeah, very key level for ETH. ETH against BTC though, bro. This is the good thing. I've been waiting so long for this. Right? I've been telling anyone that will listen that for me, this is the high confluence area for ETH against BTC. We hit that last night, right? We hit that last night. So I've got 60k in total. I've deployed 30% last night. I've got 70% left to deploy. I don't care if we go further lower, right? If we genuinely lose this level with confirmation, I'll just get rid of that 30% and just my total whatever's left, I'll just look to bid lower, right? If not, and we start actually like chopping about, I'm just looking for structure to slowly add up on. I want to allocate as close to 60k as possible by the time the high low comes in. After that, I literally don't have to do anything, just sit back and relax. But this is ETH against BTC. Like I said, seasonality wise, everything wise, if not here, then where? You know, it's like you're already at devalue areas. You're at the 886s of this entire move up. And if you don't bid here and you're waiting for, I'm just gonna wait for the bottom tick, that's just greedy. Because if you don't get it, then you would have just been wasting a very good opportunity anyway, right? But we built this chart up on stream. But just as a quick reminder, you have your standard deviation 1 from your low to your high, right? So this is that trick. Some of you have done this lesson, some of you haven't. Will do so in the future. Low to high volume profile, right? You're looking at the actual pivots. Low to high volume profile of this, the standard deviation 1 point of control is there, right? I don't have to say standard deviation 1, point of control is going to be the same anyway, no matter what standard deviation you're looking at, but it's a point of control. And you have your standard deviation 1 high to low, value area low. So from this high to this low, your value area low is also in this area. You have two yearly levels, 2020 12-month seller zone low, and then the 2018/2019 12-month buyer seller zone low, right? So very pivotal areas. And on top of that, you have two different wave structures, the macro bat 886 and the macro shark 886 at this level. Just because of how nice an area this is, like I wouldn't be surprised if they gave us some fuckery like this, but as long as you don't lose value area low, I do not give a shit. Okay, I do not give two shits. This is just the area where you slowly make sure you don't get liquidated, just survive the chop. That is it. Yeah. But ETH against BTC, I do want this. I'm very interested at the areas we're currently in. Just, you know, I don't care if we chop, like I said, I just want some sort of bullish structure to develop, whether it's a cumulative or high highs and high lows, seller absorption, I don't care what we get, I just want to get it, right? That's it. So, yeah, but we charted this live on stream. It's going to be on one of the stream recordings if you guys missed the stream where we built this together. I took this, I think some of you were here for that stream, right? When we went over this, I said bit by bit, okay, fixed range volume profile first, and then buy seller zones, and then the M shapes, like, you know, the high to lows, low to highs. I think we built this together, so just some of you here were in that stream. So, but yeah, ETH against BTC, pivotal areas. And another thing to say is don't expect rebounds to all-time highs straight away, right? Like I fully expect, I'm sat here expecting, right? I'm sat here, even if you don't get it, I'm sat here planning for, okay, what if the lows we put in yesterday get rated once, right? I'm 100% happy and content with if that happens. I would just bid more. Okay, I would just bid more. So don't go all in now thinking, oh yeah, I've caught the bottom. Especially after like the 30% bounces we've already had off the lows, right? That's not going to be the case. So let's take a look. That goes for any coin you're looking at. Okay. Man, that lock screen, that pic, the wallpaper, bro. That's cold. That's cold. Four of a kind. That's cold. Um, okay, let's take a look at something else. Solana. Look at the daily. Exactly what I mentioned last time we did this stream as well on Solana, right? So last time we talked about Sol, it was over here. What did I say? I said basically visualize Solana as a range. That's all we have, a range, right? You have a high, you have a low, and then you have back to the highs again, you have back to the lows again. You have a very, very clear range, right? We were looking at Solana as the range mid, and I was saying, okay, look, unless you're scalping, there's no point getting into Sol right now because the range mid isn't where you get your best RR trades, right? So what did we get? We lost the range mid, and then we turned the range mid into resistance on the lower time frame, right? As soon as we turned the range mid into resistance, what did we do? Went straight back down for the range lows again. We hit the range lows. 2024, 2022 12-month levels got hit. That bat I went over in yesterday's stream before the capitulation happened. I thinking about it, I did the yesterday's stream at the perfect time. Not because I knew the capitulation was coming. It was literally just a stroke of luck. I streamed last night when I did. But I'm glad I did because many of these areas we were talking about bidding hit right after we were literally looking at Solana. Hang on. So yesterday would have been Sunday, right? So Sunday midnight, and then around Sunday midnight is going to be, let's say, where's it gonna be? Sunday midnight. Did stream around 1 a.m. in the morning yesterday, or this morning rather, yeah. So 1 in the morning this morning. So basically, like we were looking at this somewhere up around here, and Solana was just like struggling underneath this mid, right? So we're saying, okay, look, there's 886. If you're gonna bid Sol, this is gonna be the logical area to do so. Said that in yesterday's stream, and that's where you hit, right? That level with all this confluence, that's where you hit. You're still above your breakout, right? You're still above that. Do I need this on my screen still? One sec, let me check. Yeah, I'll leave this on for now. We have a liquidity triangle here. So from here to here. And last but not least, from here to here. Therefore, I'm just going to go ahead and draw the triangle down. Just go from here. Let's take it to this low. Take it up over here. Pull it out a bit. There we go, because that's good enough for now. Yeah, perfect. There's your liquidity triangle, right? There's your resistance for now on Solana. Oh Jesus, there. Critical drawings. Lock that in place. Yeah. It's the buy zone from last night. There. So another tip I gave you guys yesterday was watch out for the weekly / daily buy zones you created by the time we closed, right? If you'd done that, you would have had, even if you didn't catch the bottom, you had the areas from where you needed to actually pivot your plays, right? So for example, on Solana, you had this, right? This was your weekly buy zone by the time the weekly closed yesterday. What happened after that? You got a big fat dump, right? But what happened after the dump? If you take a look, you went, and then the important thing is not just the fact that you dumped, but it's the fact after you dumped, you reclaimed your previous weekly close / your weekly buy zone from last week plus your daily buy zone from last night into support, right? And those flips into support, if you missed that entry, that was your next areas for entry. This is literally the scenario I described on yesterday's stream, right? So for no matter what coin you're looking at, if you missed the bottom, this was the entry model that was described yesterday, right? So pretty much any coin you can go and look at it weekly closed after you dumped, recaptured, and then from the recaptures where you got your next springboard up. So we have this. And there's nothing much to do here on Solana now, right? You hopefully what you can see is we're coming up against resistance again, up against range mid 2021 levels, which is why I'm saying for many coins now, if you miss the move, right? If you miss the move, it's what it is. Don't fret, you'll get chances again, right? You'll get chances because you're either waiting for this and you'll get an amazing RR entry, or you get a pullback back down here somewhere and then you either flush the lows, or you know, you get some sort of high low structure confirm at the next key level and you can just enter based off that, right? Definitely don't enter right now on, for example, on Solana, because you're literally underneath resistance. It doesn't make sense to enter after such an strong impressive rally up from a big liquidation event, right? So for many alts right now, this is the case, right? They are sat right underneath resistance. It's the same with Sol. We've already looked at it. It's the same with Inge. I could go up, ETH. I could go up to something like Injective. Right, we're coming up against a supply zone here. You can see that impulse consolidation, impulse back down. That's a supply zone. We're at resistance, right? So either this gets flipped and you get in, or you just wait until more structure now develops. You go and take out some targets to the downside, put higher lows in, so on and so forth. Doesn't matter what you're looking at. Aptos, same thing, right? It's like you've got a supply zone. You're up against a supply zone, 12 months level just above you. You have no risk to reward in terms of an entry for a long over here. Or it wouldn't make sense to buy spot either, because if you're gonna buy spot, you might as well just wait until you back off of this, right? Yeah, but you can see resistance. Everything's back at resistance now, right? So you know, if you did enter at the lows, especially if you enter besides, not a bad place to honestly trim some profits. If you think, you know, I would want to be a bit less, like, you know, risky now. I want to be a bit de-risk. I want to free some capital up in case we get one more pullback. Not a bad place to TP for many of these. Okay, I'm talking for leverage trades, of course. If you're entering here to sell spots here, that's a interesting strategy. But for leverage, definitely a good place to take some profits here, because that's a really nice rally up. Unless you specifically entered with, like, you know, I'm not going to TP until all the way up here, like straight up swing mindset. But if you entered as a trader, this is a very logical area for many coins to take some profits, because we could very well chop a bit before we actually reclaim these levels and go higher. Okay. Been playing this log chart on Bitcoin. It's the TBFE uptrend from. Yeah, brother. It's like, it's so good because it doesn't matter which trend you use, right? You can use the earliest one, you can use the latest one. It's gonna give you very significant levels. Yeah, this one's definitely there for me too, for scalping and stuff. Absolutely beautiful. You find it hard to deal with all the confluences. Do you mean in the sense of like having harmonics plus, like, you know, buy seller zones, so on and so forth, or do you mean like when you had there's like a load of buy seller zones or something like that? Ah, okay, yeah, that makes sense, brother. Especially if, like, you know, normally your trading style doesn't like incorporate like a shit ton of confluences. That definitely makes sense. When I first got started, it took me a while to get used to actually putting everything together as well, right? But once you get used to it, it will just come with, like, you know, you're literally just staring at the charts and getting used to it, bro. It's not gonna be. It's not something like, you know, you can't do, you can't understand. It's literally just getting used to it. Um, of course, like, you know, what you can do to make it easy for yourself is perhaps always begin with the foundations. Like, always begin by putting the key inflection areas and the buy seller zones down, right? The historical range mids, the historical price ranges, sorry, always the first thing you should put on, if you want to do it, let's say brick by brick. Historical price range, historical price range is always first, and then, you know, that comes with the historical range mids, of course, and then you put your key inflection areas on, you put your buy seller zones on. With that, you have your foundation or your 12-month key levels, so on and so forth, right? If you want to focus on quality over quantity, you don't need to do 3 months, 4 months, 6 months, so on and so forth, unless it's a very new coin, it's very young. Normally, you'll see nowadays what I do is as especially since 2024 is closed as well, I literally only put the yearlies on the left for buy seller zones. I already have my key levels like this, right? You throw key inflection areas on top, you do not need anything else in terms of key levels. Right, after that, all you have to do, okay, open up a separate chart if you want to log fibs, right? If you want to do fibs, sorry. If it's getting too much to do in one chart, then do fibs in a separate chart perhaps, right? Um, so for separate canvas basically. So for log, I have complete separate canvas, as you guys know. And then harmonics is, we haven't done the harmonics lesson yet, bro, but once we get to it, it's nothing too complicated at all, right? It's just wave structure. So over time, well, you basically train yourself to incorporate not just, okay, here's a buy seller zone or whatever, but you see it as a more holistic approach, right? Okay, there's buy seller zones, but what else is there? Is there market structure? Is there liquidity lows, right? Is there range extremes here? Once you have all of that together, then you'll have, even amongst the key levels you have, you'll have the areas that are extremely significant on your screen. And then, you know, you'll just know where the highest EVs are based on, okay, well, how significant is this area, right? So if you have an area where there's a 886 completing and that's lining up with previous, let's say this is a cumulative structure, right? And we know that there is 2024, in this case 4 months, right? I left the 4 months on because say isn't a very old chart. There's 2024 4-month zone in between this 2024 12-month buy zone mid and buy zone low. Then, you know, we have a potential area but we know need to hold. If this is lost, we know that the range extreme is going to be that 2024 12-month buy zone low, because below this, you know, there's no point holding until some sort of bottoming structure comes in. You've lost everything that happened in 2024, right? So I think of it like you're setting, like, if this then that kind of scenario, right? You're kind of putting everything together. It becomes way harder to look at it, of course, when don't go basic. When you start throwing this down, don't think about it as one straight away, right? Think about them as the individual part first. So analyze something as just key inflection areas first, and then just as buy seller zones, right? For you to get used to the system, and then just in terms of diagonals. And after you get used to everything, you've got the perspective from everything, then you throw it all together and you realize, okay, but in terms of if you were to throw this all together, right? In addition, with cumulative results of that, is this particular area is specifically significant, and that is what you base your high conviction entries around, so on and so forth, right? You'll definitely get there, bro. Don't worry about it. It's nothing too complicated. Like, you definitely get it. It's just a matter of actually getting used to it. That's it. Yeah, brother. Adam, this is being recorded, bro. Yeah. Pulse on uni. I'll take a look at uni in a minute, bro. Right. Oh, okay. Yeah, that makes sense. Yeah. Yeah. For me, I circumvented that by only putting higher time frame analysis on my screen. If I want to do lower time frame analysis on top of the higher time frame, I either make sure it's very well marked in my object tree, or I just use a separate canvas. But I found that, you know, especially over the last few years, like over the last, let's say, 4 years, I don't really put lower time frame levels on my screen unless I'm scalping. You only see me put higher time frame levels, key inflection areas, and then that's it, right? Wave structure. That's all I trade based off. Becomes much easier to see that way. Your bigger picture is always there, because once you get to your higher time frame POI, you can easily switch to your lower time frame and make sense of what's going on, right? You don't have to have your lower time frame levels on all the time, because your high RR trades isn't going to come specifically from your lower time frame levels. Your where you size up, where you take big bets, right? Those are going to be at these deep 886, deep value areas where you've taken liquidity, right? You've gone to the range extreme, so on and so forth. Once you're in this area, then you can switch your lower time frame analysis on for this general area to throw extra confidence onto your higher time frame to get those good entries. But after you've got those entries, again, you can turn your lower time frame ones off, because the TP targets are going to be based off the same higher time frame analysis. So yeah, no problem at all, brother. Thanks for stopping by, Adam. Oh, that's a good point. Okay, so let's make sure there's no confusions with this. That's a good question you asked, bro. So let's go back to BTC once, okay? Um, Yesterday, what I was trying to say, that this is more confluential than that, is I was trying to say, in in perspective, right? These can be more confluential than your horizontal levels. That's what I was trying to say. Okay, not historical levels, but horizontal levels. And the reason for that is because these levels here, they're going to give you like what happened over history, right? So for example, if I lock this in place and I turn on this, right? This is the example I gave yesterday. If I go over here and I turn on fifth speed resistance fan V1 first, right? Let's say this blue, right? There is nothing else. The only thing that can kind of tell you that there's some key levels here is like, fibs, and that's it, right? And with fibs, of course, comes wave structure, whether you do Elliott waves or you do 4-point wave structures, in this case, ABCDs or harmonics, right? But that's all correlated to fibs, right? And so is this. But this is the only thing, right? Diagonal applications are the only thing that will give you levels here that have historical context, okay? Any new wave structure that comes over here, ABCDs for example, if I go and turn on group 7, right? Let me go and turn that on. There is no historical context behind this area. All I've done is projected the fact that, okay, there's a 382, therefore you're looking for the 2.24, the 2.618, and then the ABCD. And by the way, the 2.24 is resistance for now. Be very careful of this. Don't go FOMOing in just because of a beautiful candle. We could very well engulf this and chop around before we go higher. Just quickly off track. Okay. So if you see, if you see serious resistance coming in at this area, do take it seriously, like I've been saying. Right, that right there. Right, you can see breakdown here. So if you wanted to scalp a short, you could definitely do it like so. Depending on if you want to swing, I'd put it above this. But if you want to just scalp it, something like that, right? Stop us just above, and then you're targeting these lows. Risk to reward of 3, something like this, and then just take it from there. As long as you're below this, there's no point being in a long, basically, right? Especially not this area. But let's go back to the point at hand. The point at hand is, if the only way to, even these, right, the ABCDs that we put on, they've gave us targets, and we've waited, and we've waited for price action to confirm those targets, and they've done that. So we know this 2.618, which has been front run for now, especially this 2.24, we know that's very, very valid. We can see all the taps in terms of resistance and support we've had, but there's no historical context to this area, right? No historical context at all. And it's not surprising, because in terms of horizontals, this is an uncharted territory. But in terms of diagonals, this isn't uncharted territory, right? Because, for example, we know that if we put the fifth speed resistance fan on, right, based on the low of the 2020 last completed wave structure, right, the start of the last bull run to the first peak of the bull run, we know the 61866 and the golden pocket plus liquidity rate basically is here, right? It's the exact same level that is now in play today, right? And there's no way you're going to get this with horizontals. There's no way that you're going to get levels that were active back in 2021 and 2022 being active at price discovery, right, with horizontals. It's just not possible, just because of what horizontals represent. Horizontals represent just one layer. If you think about, like, each price point, like a layer of clay, like a slice, right? It only represents one slice, right? Whereas with diagonals, you have historical context here, right? Where's the historical context? Well, look at it. Like, this peak came in here. After that, what happened? The 61866 was support. After that, it was support, but then it turned to resistance, and then it turned to support, and then it turned to resistance, i.e. the golden pocket plus liquidity rate was a range, right? You ranged here before. This is the exact same golden pocket plus liquidity rate. It has historical context. So what happened here, you're not going to be surprised if something similar happens over here. For now, what have you done? You've gone up. Look, 702, 707, right? What was one support for so long? Turned out to be resistance first and foremost. That's the whole reason that sent us into this consolidation period, right? Buyers couldn't accept above what was one support being lost to resistance, still proved to be resistance. Even though it's at a completely different price point, it's the fact that it is a diagonal. It represents information over time. It represents trend over time. That's why it's so significant, right? You turn it to resistance, and the only way we went parabolic is after you buyers actually managed to get above that. So the point I was trying to make was, ultimately, Bitcoin could lose this and come down to this, you'd still be fine. Why? Because even though this would represent a drop, right, until you actually went and lost this level, that would simply be a breakout retest. Yes, you can have breakout retests on the diagonal. That's a breakout. You'd have a retest. What was once resistance into support. What was once support got flipped into resistance and got flipped back into support, right? And it wouldn't be out of the ordinary, because we know that this zone has been privy to that before, right? To consolidation. So this consolidation was happening in a downtrend. This consolidation happening in an uptrend. If the downtrend consolidation led to a breakdown, then we can assume that an uptrend consolidation could very well lead to a break up in price, right? Even if you don't break up in price, even if you just stay chopping within this area, eventually this is going to take you, depending on how long you stay chopping here for, up towards, new targets on BTC, 116, right? 120. Let's say you manage to find yourself back within this zone by towards the end of the year, right? 126k BTC, right? So let's say something like this were to happen. You're going to get extremely choppy here. You wouldn't be surprised at all, right? Because this has happened in the past. And that is why, I say don't just pay attention to horizontals, but pay attention to diagonals as well, because this is a different perspective you're not going to get. You're just not going to get perspective like this through any other means of TA. Okay, so this is unique and a big benefit and strength of being able to read diagonal fib applications. Because that's why I said what I did yesterday, bro. Hopefully that makes it clear. Yeah, sure, Grok, bro. Catch you soon, man. Yeah, no problem, brother. No problem at all. And of course, that's from that peak to that peak, right? We know there's others as well. So the other main one is from, of course, that low to then your previous all-time high of your last bull run. If we do that, we know there's just an extremely important zone right over here, right? Because you have the 0.5 as well of the next speed fan. So this very important zone. Only if you lose this zone do you have a chance of actually getting down towards here. And that's if the buyers let you. Right, if the demand is too strong, there's no guarantee we're going to go here. You could very well just keep chopping like this until this catches up with you around 90k. That could also be a possibility, and you go higher. So they never give you the lower targets. They can manipulate the prices any way they want at the end of the day, right? But yeah, so that's that. Let's take a look at a few more coins. Hype, insane reaction. I was really hoping we'd get a breakdown, because I would have loved to pick this up at 15, but it's what it is, right? You hit there. I bought at the end of the day based on what I said yesterday. Wait for the weekly close, right? Wait for the weekly close. Wait for the buyer zones to be created off the weekly close, off the daily close, right? The daily close is right over here. The buyer zone was created. As soon as you see strength coming into this area, what did you do? You raided, and then boom, right? You started flipping this back into support again. As soon as you see that, just get in. Right? That was what I said yesterday. And again, you're at resistance again, so not a good place to enter until these start being flipped to support. So basically every coin right now, pretty much after this pump, is going to be set at res. It's not a good time to enter. Okay, don't think we're going to go to all-time high straight from here. It could happen, but what's the chances of that, right? Extremely low. So, because I'm never one to say, yeah, it's never going to happen. But just very low chance of that actually happening. More time, we're probably going to like stop out people that long late, right? We'll probably liquidate some more people. Let the longs build up. Let the late longs come in. Liquidate them. Market makers get their bags filled again, and then you go up. Right? You see this happen a lot, right? A lot. But yeah, so far this is looking good. Let's look at PAL. Amazing. PAL hit the areas we were talking about as well. Nearly a perfect 886. We just need like some sort of basing structure. Many of these alts could run so hard, guys. Like, you gotta look at this in perspective. Many of these could be setting off for some insane wave structures. If this does basis support, and then sellers just can't take control here. For example, all we need to do now is go and flip that B point, right? You do that, you've triggered a BAM, taking you up towards 79 cents. Right, my average right now on this is around 16 cents after yesterday's dump. We hit the box that I said, that I gave in crypto chat, right? This is the box I was saying is a good. Sorry, not crypto chat, and stream yesterday. This is the box I was saying I want to enter PAL in. We got it, right? So if you base around here, even let's say you have 9,000 PAL, right? That could take you a long way in terms of money, right? So just it's many of these also areas like this. I implore you guys, please do not get impatient, and do not blow your account up at this stage. Okay, expect chop. Just go in with the mindset of expecting chop. That way at least you'll be risk averse, right? Expect some more chop, expect some more fuckery. There's going to be volatility, right? It's not going to be a one shot straight up. We could very well reverse the entire move we've done today. How many times has BTC Burj Khalifa? Ask yourself that before you make any serious choices. Pretty much any time we've had a big liquidation event, BTC has Burj Khalifa at one point or another. So this entire move could get Burj Khalifa within the next 2-3 days, right? So just remember the 20-40-40 rule. And you asked about this earlier, bro, so I'll just answer this. This isn't like only strict 20%, okay? So what I mean by the 20-40-40, in case there's anyone confused about this here, is this is for CMP entry, right? It's current market price. When you get to your area where you think, yeah, I'd love to have some of this asset class here, right? This is prices where I want to buy this entry here. It doesn't have to be 20%. What dictates how big this ratio is okay, from the price you're trying to enter at, right? Current market price, how far is it in validation? If invalidation is 40% away from where your CMP, then obviously you're not going to go with a 60% entry, right? Because that is you have 40% left to cover 40% drawdown. That's just a stupid way to actually size up, right? So in cases like that, yes, 20%, right? Something like that, 20, 25%, 30%, because the further you are from invalidation, the less position size you want initially, right? Because we're not going to get here to we're not just going to gamble and just randomly enter. We're entering with a plan, right? But now let's say you're 10% away on spot, right, or whatever, from your invalidation, then all of a sudden it makes sense to have not just 20%, but perhaps increase that to 30% or 40% or even 50%, right? If you're okay with the 10% risk, because you're very close to invalidation. So this your CMP entry that is completely dictated by how close are you to your invalidation, right? The closer you are to invalidation, the higher this percentage can be. And let's say then that you're, let's say, 5% away from invalidation, right? Let's say you go with a 40% in that case, right? 40% CMP. If you're 5% away, you might as well go with 50%, to be honest. But let's say you're 10% away then, right, from invalidation. Let's say you go with 40% CMP, right? You deploy whatever, let's say you have a $10,000 allocation for PAL, right? 40%, i.e. $4,000 of that you're going to buy at CMP, meaning you have 60% or $6,000 left to actually size up with. This you're going to split in two, okay? So that 40-40, what is that? One is for either sizing up when, you know, key resistances above you get flipped to support, or when local resistance get flipped to support, or DCAing with, right? So this is strictly for you playing with market structure in terms of price action. Okay, price action tells you, okay, the higher resistance being flipped to support, you size up from this chunk. If you go to lower DCA levels, you size up from this chunk, right? The final 40%, this right over here, right in the 20-40-40, that is strictly for when the trend shifts to your favor. Okay, if you're entering this trade as a long, that means you wait for your, let's say you're in a downtrend, you wait for the last lower high, that let's say lower low to be taken out, and then for a higher low to come in. That higher low that confirms, okay, you know, you now have a shift of structure. You've gone from the left side of the V to the right side of the V, from the sell side to the buy side. You save this specifically for that. Why? Because it does not make sense to be fully positioned when the trend is not in your favor. Okay, I will repeat, does not make sense for you to be 100% positioned for upside if the trend is to the downside. Okay, everyone tells you don't catch a falling knife, but then everyone gives you a DC, entry DCA1, DCA2 where you're fully positioned. It doesn't make any sense, right? You want to be positioned fully only when trend shifts to the upside, right? So that's why you save this allocation. Then if the trend doesn't shift, don't spend this, right? You always have cash on the side. Now, of course, this isn't going to be 40-40. So let's say you went with this example where you went with 40% CMP, you have 60% left. You can split that into two, 30%, 30%. So you have $3,000 to do DCA / size up with, and $3,000 for when the trend shifts. And you can, even with just these two, you can change them around how you want, right? So maybe you want a 4,000, 2,000, right? You only want 2,000 for when the trend shifts because you want a bit more capital for in case you do DCA a bit more or size up a bit lower, right? Completely up to you. You have the freedom to do it, but the main reason I gave you guys this system and I came up with this, it's just the entry model for myself, right? It's because it made my life easier, right? This way, I know I'm buying a bag when the price is right. I know I have capital left over for flipping local resistance to support or for DCAs, and I know there's always cash left over until the trend shifts to my side, right? The trend is shift to my side. That means I have a portion of capital I just do not touch. Right, you always want money on your side. It never hurts. It definitely hurts being 100% in the market. It never hurts not being 100% in the market. Okay, it never ever hurts to have cash on the side. That's the whole reason I came up with this system, and I teach it to you guys. So if there was any confusion about this, hopefully that explained it. PT5. That's a work of art. You can frame that. Frame that, make it into an NFT, bro. Make some money from that. Yeah. I've not looked at BTC in terms of Elliott waves in a while, brother. But I can do an update for you guys when I get around to doing it if you want. I'll look at it in terms of Elliott waves. One sec. Let me get rid of all of this. Oh, shit. There, delete that. There you go. But yeah, many alts like this. So the main point I'm trying to make is many alts are at resistance currently, right? Look, supply zone for PAL as well. Many are at resistance. Just to be careful of that. Don't go blindly market longing straight into resistance again, thinking this is it, right? You'll have more time than you think to actually, you know, fill your sacks up, right? You'll have more time than you think. So let's look at uni for you, because you asked me if there was anything interesting going on in uni. I mean, straight away we can already see that you hit the golden pocket plus liquidity rate in terms of the fib speed fan. That was from this low to this high. So if you go from this low to this high, and let's make sure I have actually pinned the low. Let me go with deep retracements. Yeah, you hit the 87886, right? About to be expected. Did you have anything in terms of wave structure? No 618. Oh, one sec. Oh, that sucks ass. That would have been so clean. Never mind. Okay. Uh, 0.5. Yep. So after the 0.5, we have 2.0. There you go. You had an ABCD, right? Very, very clean ABCD. 2.0. 2023, 12 months, right? I've not even put the 2024 levels on. I'm sure there's some around here. But you went to your 2023 key levels. Key resistance in history. Came down, tapped at a support again. Took out some liquidity and then bounced. Yeah. Very nice. Plus, I think you had a bat as well. One sec, let me check. I'm pretty sure you did have a bat here. An internal bat. So from this wave structure up to here. Yeah, you did. So the bat is right over here. There. ABCD, you had a bat, there's your PRZ. Lining up with 2023 yearly levels, boom, you have your key level right there. You lose it, you're not interested in holding. But as long as buyers are stepping in there, that's where you bid. Once again, you need to back to resistance. 2020 12-month seller zone mid. Right, so either you flip this zone between $10.07 and $10.69 into support if you want to enter now, or you wait until you get some sort of low time frame high low, or you come back down to your higher time frame levels. But you're waiting for structure to tell you it's okay to buy now, right? The move is done. Now we need to wait for your next, let's say, something like this to get in. Otherwise, expect some more chop perhaps. But yeah, that was uni for you, brother. No problem at all. Yeah, I need those days back, bro. Need to recoup my couple millies that went down the drain with NFTs. But yeah, is there any coins you guys are looking at in particular? Because it's really true what they say. Like when you have a lot of options, you're left immobilized. There's so many charts. I'm just like, what do I look at? Right, for you to look at Rune. Well, actually, we've already touched on Rune. Never mind. But MKR, right? This one I was looking at yesterday. I was telling people yesterday, if we got this 1.13 on MKR and it held and you based around here, this would be amazing. You have your 886, right? And this was a harmonic I projected even back in September of last year, because this was a what I'm trying to say, this was a incompleted harmonic back then. This 86 hasn't hit, right? It was looking unlikely back then, but hey, that's why you be patient. I did not touch MKR, right? I didn't touch Maker, and all of a sudden now you couldn't ask for a better end. Well, you could, I suppose, if you swept that, but at one point you got to consider, did the chart even come back to life if it goes to those levels? So monthly fair value gap right over here. If you take a look, higher time frame enough for me to take seriously, right there to there. Monthly fair value gap. You have an 886 of the bat. You have a 2.618 of the bat as well, and you have a 1.13 of this, right? So from this A to B to C, right? So basically from X A B. You have a 1.13 extension, i.e. liquidity rate of range extreme in terms of this wave structure, and to top it off, also you have a 0.5 and a 2.0. Loads of confluences here, simply in terms of wave structures and liquidity pockets. You turn on your 12-month buy seller zones. This area also had, just above it, the 17-18 12-month seller zone low, and it also has the 12-month macro read buy zone mid. Right? you're at that area and you're struggling against that area as we speak. Once again, you've hit your 20, 17, 18, 12 month seller zone low and you're treating as resistance for now. And so again, this is also at resistance. Okay, so this is what I mean. Literally every crypto right now is propped against resistance. So please don't just go mark along in anything thinking, yeah, this is it. We're about to make a run for it. Before you know it, they're gonna flush this back down to the lows again, right? But if MKR does base around here somewhere, then we have again a very beautiful wave structure potential taking us back towards 4,500 basically at some point in the future, right? Now, of course, to do that we have to go and flip the B. That'd make the probability increase. But even from here to B, that's basically a more than a 2x, right? That's a let's say from where you currently are up towards the B, 141%, right? That's a serious move. So yeah, I'm excited. Like, so many alts are amazing places like this. Magic Eden, did it hold that level I told you about? One sec, bro. Let's take a look. Oh no, no, it didn't. Oh, that is dark. That is depressing. Yeah, I wouldn't touch this until you basically do that. That is crazy. Maybe you'll find something on log, but can't be asked. Right, Farcoin. Again. Farcoin, but like I said, if you'd drawn the weekly buy zone down, like last night after the weekly closed, all you have to do was take trades based off what happened there. As soon as the price open, look what they did. Nuke this. They tried to challenge the lows again, right, for the buy zone. Front ran it this time around when they nuked it, claimed the mid into support, and then sent it up. So that mid flip is what I entered on, and then I sized up somewhere around here, I think, once. But yeah, so as soon as the buy zone is created, and this is what I mean, this is why buy seller zone is so powerful, is the fact they're not just support resistance, it's support resistance now based on what happened in terms of buyers and sellers, right? So then future price action becomes so much easier to understand at those areas. So you held the mid, and then you went higher. Metis, there's loads of these coins that have just hit really, really deep levels, right? Metis is another one. Absolutely beautiful candle. 1.61 of the shark, 886 of the shark rated, bat 886 hit, trying to close above. 2024 12 month buys on low, right? Defended, very, very good. I would not be in this coin until this gets reclaimed. Okay, reclaim for entry. This is absolutely disgusting. I want nothing to do with this coin at this price. As counterintuitive as that seems, at some point it's just the risk is just not worth it, right? For me, the risk here is not worth it. I don't want to be holding a bag where I've got no reason, I've got no thesis to be holding not here. If your only thesis is look how low it is, I mean, yeah, I suppose it is a good enough thesis, but look how low it is isn't a valid thesis if then I could counter that by saying, yeah, but it could go lower, right? So now what I want is some sort of reclaim of this structure. I want this to base around this area, right? Chop, I don't care, base, and then ultimately decide this to be the floor. If that happens, I would long the hell out of not, right? But I will not be doing that until this gets flipped into support. So but yeah, there's many coins, guys. Arbitrum, I gave this yesterday, literally before the dump happened last stream. I was saying it'd be unlikely, but imagine if we got Arb at like the shark areas. We had the ABCD as well, right? 0.5, 2.0. That is literally where we went to. Just take a look at that, man. So again, for Arbitrum, it doesn't matter if you missed this, right? Doesn't matter. This whole thing doesn't matter. What matters is this. That reclaim will give you an entry just as good as this in the grand scheme of things. Okay, so don't fret that you don't have ARB over here. Right, I've got a small bag, but I didn't even alert this one because that was way too risky. Now it's free fall, right? This was risky. This was a pure just, okay, buyers are coming in after a huge capitulation buy. That's it, right? I literally have like 70% left to buy still. And I'm not going to do that below these levels, right? The only time I'm going to deploy those now is if these gets reclaimed to support and structure comes in. So don't even worry about it. You'll have plenty of chances with many of these alts to add buy over time, right? So no stress. GMX, same thing. It's in free fall right now. I'm not interested until this level gets reclaimed. OP, not interested until the bad gets reclaimed, right? You can see what I mean. Right, if you missed this entry, I did open a small bag here again, but again, it's like I say, I'm layering in with the 20-40-40 strategy, right? I'm not all in. When I say I'm layering in, I means I still have a decent chunk left, but still in a downtrend. Key levels are still above us, not below, which means there's a lot of work to be done for me to start deploying capital seriously, right? So reclaim this, yes, I'll add, right? But until then, no fret, right? So pretty much any coin you look at that's gonna be like this right now, bro, guys. That's why I say be very careful about hitting market long right now, right? Don't fall into the, oh, I missed the bottom. That's emotional trading, okay? The same people who are buying here, I can guarantee you, majority of them are going to be people who offloaded the bags in the capitulation week. Okay, or if not, they're going to buy a bit higher. No, I'm not in GFI, brother. That stopped out for me at break even once we got that pump up. It's up 70%. Nice. Is that for Arbitrum? Yeah, yeah. The airdrop was nice, but this thing's just been going down. Yeah, bro, same. Same. Sold pretty much all of my ME at around $6 something average when I got that. Aptos I sold as soon as I got that as well. But yeah, pretty much any airdrop token I've got, I've just sold it. I wish I hadn't sold my bonk so early. That's one I can tell you about. But those are rare exceptions, right? So, man, those were the good old days, bro. When the bonk airdrop was going on, and you could just, the meme trading was so niche in Sol, right? Back then, when bonk came out, like hardly anyone was doing it. There was no trenches. Trenches was the NFT space. I did. Yeah, I went for the second Solana phone, bro. I didn't get the first one, but I went for the second. Yeah, I've still not got it. But I think I get like airdrops and stuff now and then based on that, so that's good. Yo, sup Lang Tang, brother. How you doing, man? Hope you're well. How have you been? It's been a while since we talked. Yeah. The original Solana phone got like better benefits and stuff. So I kind of wish I just got the original, but back then I was looking at it like, this looks like the biggest scam going. Yeah, bro, Cleanosaur's NFT, man. Yeah, for sure, bro. That's great. Yeah, sure, Dragon, brother. Catch you soon, man. Yeah. I'll be reaching out to you guys about one-on-ones, by the way, from this weekend onwards. So if I get all my work finished by this weekend, I'll reach out to you guys like start this weekend. Otherwise, from next week, we'll get it patterned up. Yeah. But let's see. What else do we have? Let's just do a quick LDO. Yeah, I was saying earlier, but LDO, this thing probably one of the best looking coins right now, in my opinion. This thing did not break structure. Held like an absolute rock, like an anchor. Look at this. Smiley face is literally still intact. After ETH absolutely shut the bed, this thing didn't even cough. Look at it. LDO's one, guys. If you're looking at altcoin for ETH beta right now, LDO is the one that's showing strength. I feel like there's gonna be some sort of extremely bullish news coming out for this in the near future, and this thing's just gonna go up because that is crazy strength for what we just witnessed in the crypto markets. That is ridiculous strength. Zcash, yeah, I'll look for you, bro. Let's take a look. Zek. It's not in this one. It's in this one. Ooh, okay. So 12 months. This thing's got so many candles. I have to be. What am I doing, bro? What have I done that for? 1 second. Can't be doing that. Rookie mistake. There we go. Right, there's your 2024 candle. 2024, 12 months. This is your seller zone low. PG. Right. 2024, 12 month seller zone mid. 2024, 12 month seller zone high. And then we're going to just go ahead and draw. 1 sec. $2024. Right, 1 sec. I'm losing my mind here. That's not a seller zone. Right, this 12 month seller zone mid. 2024 12 month seller zone high. Right, let's revamp this. This is your 2024 12 month macro read. This is your buyer zone low. There you go. 2024 12-month macro read buy zone mid. Boom, there you go. Okay, so for Zcash, I'm not interested in any long positions where we currently are, right? You can see why. 12-month level is at 37.38. That is a $3 difference. Not worth it. There is no risk to reward on this earth that you can pull out in terms of trading over here. That's going to make this trade worth it. So either you wait for this or you wait for some more structure to the downside before, where you can actually get a good RR trade based on like key levels, candles that develop somewhere down there. Right, so of course we've only done the 2024 levels on, but that's because this thing has so many candles. Right, so let's take a look. What else do we have? Locally speaking, of course, if you go to the daily, did we have an M shape? Seems like we did, so let's take a look. That looks to be a bat for now, but that looks a bit too deep to be a bat. That's way too deep, so it's not a godly either. Okay, so in that case, I'm gonna go from here. Please be a 618. Oh, I hate it when this happens. Okay. 0.5. 0.886. If we do get a drive deeper, there's why. There's a reason why. Okay. We'll look for ABCDs too, but just give me 1 second. Is there any sharks? No. Okay, so this is it. We're looking at 0.5. I like to be extremely accurate with my ratios. That's just a me problem. There we go. Right, let's pin this to the 886 up over here. There you go. And after that 886, what do we have? We have an 885 down over here. So let's go for that 886. 1.618 perhaps. Yeah, well, I mean, you've reacted off your 1.618 / 786 area, right over here. But the official harmonic, that's going to be the 886. That's if we get one more deeper drive, right? If we do, then here's a reason why this could get rated in the future, and this could get rated as well. There is an 886 over there. So let's just leave that like that for now. Okay. So basically, based on your last weekly close, right? You're not going to be targeting these levels if you never lose these weekly levels to begin with. At the end of the day, you guys know how this works by now, right? So here's your previous weekly close. There you go. If you get any sort of pullback to this weekly close, and you still see, buyers being active here, that is where you try to take a bid. Okay. If you lose this, then hopefully by that time, this week will have closed. But if not, then you just go to the daily, right? By the time today's daily closes, you'll have more data. Locally speaking, for example, it'll be your macro read if the daily were to close like this. And if that previous weekly buy zone is lost, then your next level is going to be 29.75, so on and so forth. Okay, so each candle close gives you a new set of data for you to be working with. If that weekly close there, the pivotal one, is actually lost now, because that's where you're buffer now. Okay, so the only way the two things I recommend for you right now, brother, is either wait, like I said, for a pullback into this area, and for buyers to still show they're in control, right? That's where you'd get in, or for you to go back up. So for you to go up and just flip that there, right? You're entering here, no logical place to put your stop loss. Might as well just wait for that. Okay, does that make sense? Yeah, no problem, brother. Yeah, no problem, bro. Right, see you soon, man. But yeah, so that's Zcash. But yeah, there's loads of coins, guys. I'll be doing a stream in Unity tomorrow as well, so I'll go through some more coins there. I'll try to take a look for new ones. If there's any coins you guys want me to look at. Oh, so Ryan still here? That'd be nice. Okay, there you go. Never mind. These were liquidity profiles I drew for him in a one-on-one session, saying you wouldn't be surprised if this actually went down over here, and it actually did. That is crazy. That is absolutely mad. Okay, but yeah, if there's any coins you guys want me to look at, just let me know. I'll make a new video on it for you guys tomorrow. But otherwise, I'll end this stream here, guys. If you guys have got any questions, anything at all, I'll be here for you 24/7. unless I'm asleep or something, of course, or I'm really busy with my business. But I'll be here for you, right? So just ping me in chat if there's any charts you want me to look at, if there's anything you want me to analyze for you, maybe rate one of your setups. Just let me know, right? Let's put the server to use, man. But yeah, guys, thanks for tuning in. I'll end the stream here, and I probably won't do a stream tomorrow, but I'll probably do one the day after. So I'll probably see you then. I'll be aiming to do daily live streams soon. So, but yeah, I'll see you guys soon.
Thanks again, bro.
No problem at
Appreciate
all, man.
you.
Yeah, no problem at all, man. Thanks for tuning in. I'll end the recording here.